Welcome back, investors, to the Investing with Our YouTube channel for another portfolio update. This one will be for the first week of January, and it's been a very good start. So we ended last week on 131,643, and we end this week on £134,911 for a 2.4% gain, which equates to 3,268 in paper gains. Overall, it's been a solid week for many of my stocks. But the biggest news was that my biggest holding overall, Google, has now become the second biggest company in the world, overtaking Apple. Now the current market cap of Google is 3.89 trillion and Apple's is 3.85 trillion. It's still a way to go before it goes past Nvidia, but it's making solid progress through there. Now the overall gain this week in terms of Google was 4.5%, but there were some other companies that had near 10% gains this week, and that includes Amazon at 9.29%, ASMR at 9.49%. You had Centrica at 8.29% gain, IREN moving strongly in the right direction as one of the losers in my portfolio, up 9.46%, KLA at 9.77%. But the biggest winner overall for the week was Oscar Holdings, which went up 18.37% for the week. And that's because there's been some positive news in terms of agreeing a deal to extend the ACA Act, which is quite important to Oscar Health's business. And it looks like there's going to be some sort of deal that is going to be agreed. And that meant there was a big surge in its share price. We should find out more next week in terms of how it's going to go. But yeah, as you can see, quite a lot of greens. And hopefully this is how at least January should continue. And then we've got earnings season coming up. So a lot of companies reporting end of the month and also in February. And this is when companies get re-rated as we see their earnings for the last quarter. And hopefully we see some further improvements and the recurrence of what we saw in the last quarter where revenues went up and earnings per shares went up for a lot of companies. Now, overall, I'm quite happy with my portfolio as of now. But there is a company that I really like the look of, and it is this one. It's called Micron Technologies, which produces memory for computers. And it's quite important in the creation of GPUs that a lot of AI companies utilize because there is a requirement for memory to sit alongside that. And I read an article that companies like Micron and the demand for this memory is really exceeding supply. And there's been a huge run up in this company, which you don't really want to buy on the top. But if you look at their PE ratio, it's still at 32, which is pretty reasonable for essentially a company that services AI, as you see much higher PE ratios here. If you look at the revenue, it's constantly growing and including net income. So one thing I do like to look at is net profit margin, and it's at 22%, which is really solid. If you look at their balance sheet, they've got 10 billion in cash. This is really solid. And one of the most important factors is their free cash flow, which is 1.67 billion, which is a really solid amount. Now, off the back of that, I would like to add to this, but I don't know what to trim. And this becomes a bit of a dilemma. So after earnings season, there are companies that, especially, for example, HIMS is one that I've given it a one quarter, and this will be the second quarter I give it. And if you don't see strong guidance and movement in terms of its revenue, then that might be one that I can cut. But I just like my portfolio quite a lot. So yeah, I'm not sure. But ultimately, this is a company that I do like and I would like to add to the portfolio if possible. Now, if we look at the overall portfolio and in terms of the actual holdings, as you can see with Google now becoming the second biggest company in the world, it has shown some positivity within my portfolio and it's gone past the £20,000 in holdings mark. I currently have 81 shares. At one point, I had over 100 shares and I've been trimming. So I have been locking in some of those profits and it's still getting close to the 100% mark in terms of gains. So this is one I'm happy about. I'm happy about Meta because I think this is going to be a strong recovery play this year. Robinhood is one company that I've been bullish on for a very long time and I continue to be, so that can't be trimmed either. Imperial Brands, it's a big solid dividend payer and I think there's going to be a bit more volatility this year within the market, so I need companies such as Imperial, which is quite solid there. Carnival, my biggest performer within the portfolio. Potentially this could be trimmed, but also the guidance from the management is that it's going to beat last year revenue numbers by low double digits. So this is one that, again, I can't really cut. Visa and MasterCard, these had a quiet last year, but now with the Christmas period, you should see a recovery within these stocks. So maybe I can trim some of these after the next earning reports, depending on where it's at. Microsoft, still a solid holding. Nvidia, this is one I want to add to as opposed to trim. So I'm not going to be trimming that either. Tesla, with the recent footage of completely driverless cars going around cities, this is one that you can't trim right now either. Broadcom is a solid performer. Can't trim that. So it's becoming really difficult to see where we're at. Oscar Holdings, with the likelihood of the ACA being extended, this one is one that is not trimmable now either. Amazon is set up for a big 2026, I believe, because it had a very sideways 2025. So this is what companies are saying. It's in a similar position to where Google was last year, where it was trading at quite low PE, and this one is ready to potentially coil up quite hard. UNH will benefit from the Healthcare Act too. IRN is in a strong recovery. As we saw, it was up just under 10% last week. And especially if we see a surge in Bitcoin, this is going to go up. Grab, potentially trimmable. Yes, this is one I could look at, but it's dominated in the Southeast Asia region, and it's primed for a bit of a surge too. Centrica, quiet performer, is up. You need that stability within the portfolio. So this is one I won't be trimming and will be keeping. BMNR, now this is one that potentially I could trim as we see Ethereum is having a bit of a lackluster performance. But you do see a lot of companies building on their stablecoin projects. So this means that there will be a larger usage of Ethereum. And sometimes you need to wait out and hold companies through their red periods. And this is one of them, but potentially trimmable. So let's see how that goes. HIMS, this is the one that potentially I could trim depending on their next earnings. Costco provides stability. Apple had a good solid year, but this is one potentially that could be trimmable as well because they need to keep innovating to have similar returns to last year, which were decent. And ASML and KLA, two smaller positions of mine, are performing really well. And yeah, they're showing that they belong in the portfolio. So thank you very much for joining me on this update. As a quick summary, very good start to the year, up over £3,000 for the week. Please give this video a like if you're liking the visibility on my portfolio and you want to follow my journey. Please subscribe, and I will see you on the next video.